This kind of unique place where the debt service, just to service our debt, not to pay it off, but just the service of the interest on the debt, is now outpacing in a year the growth of the GDP. So we're essentially, if you look at the US as a corporation, and in many ways it is, we're a zombie corporation. You would never invest in us, never. Our debt is outpacing our growth. And so they have to find somewhere to sell this debt to.
Mark Goodwin is a proud Bitcoin investor and the editor-in-chief of Bitcoin Magazine, the oldest source of Bitcoin information. This year, he and popular investigative journalist Whitney Webb published an article titled Unmasking Farmington FTX Fluent Finance and the Coming Digital Dollar. Farmington State Bank was one of the smallest rural banks in the U.S. caught in the FTX Alum Research collapse scandal in late 2022. The scandal was so massive for such a rural bank that investigative journalists like Mark and Whitney wondered why Alum Research poured $1.5 million into the bank shortly before its collapse. At the time, Farmington's total net worth was less than half of Alum's investments. Farmington was a single-branch community bank in rural Washington for decades until 2020, when it was acquired by FBH Corporation, which was founded in the same year by John Chopin, the CEO and chairman of Deltic Bank and Trust in the Bahamas, seemingly just to buy the rural bank. With the purchase came a complete rebranding and an online-only service. Whitney and Mark reveal that Chalipine Deltec has close ties to Tether, which offers USDT stable coins and Fluent Finance, a relatively unknown company that has been developing significant government partnerships in the Middle East and looking to become a central part of the coming central bank digital currency movement. In a recent video on the Big Picture with James Patrick YouTube channel, Mark reveals an even
a lot of fear about direct issued government digital currencies. The fears being that it increases the ability for surveillance and the ability for blacklisting, and this programmability, of digital money can be used against citizens from big bad evil government, which of course is true, but capital creation has really never been a public sector. It hasn't been a public sector gambit for a really long time. It's really been taken over by the private sector, and the way that works is the government issues these securities and sells these bonds to private banks who then use those bonds to create dollars. They use the collateral from the debt that they buy from the government to actually create the dollars in your bank account. The digital dollar has been around for a very long time. It's been digitized for decades. And so we have this, big fear that's been basically, simulated of digital, direct issued digital currency from the government. And we're all very fearful of that. But really what's happening, what we're actually seeing, much more so than CBDCs actually being issued, is we're seeing the private sector enter the market and continue this game of private capital creation by buying these bonds and creating these, debt tokens, basically. And that's what stable coins are. They're tokenized debt with a dollar denomination. And we're going to continue to see that. The private sector actually is very helpful for the government. We can look at COVID as this kind of model for what they're going to do, where they used, private companies to restrict certain voices, restrict certain ideas, blacklist certain discourse from the discussion about COVID. Whereas if these were actually public squares that the government needed to uphold for citizens, they would not really be able to restrict people as much. But they can go ahead and force these sort of private companies that are heavily government contracted, like a Google or a Twitter, to suppress voices. They're going to do the same thing with the banking industry, and they're going to be private, basically in name only, have very heavy connections with these private, fintech companies that are issuing stable coins. And we've already seen that. Tether already has onboarded the FBI and the Secret Service, to their blockchain. Meanwhile, they're buying $100 billion worth of government debt. And one of the fastest growing sectors of purchasing government debt are these fintech companies. So I think the CBDC thing is really going to be basically essentially a red herring, and we're going to see the private capital creation gambit continue. There was $100 billion worth of treasuries purchased by Tether and its subsidiaries, and the people that own them, like Cantor Fitzgerald, Deltec, these banking partners. They're one of the fastest growing markets for government debt purchasing. They would be in the top 20 of a sovereign nation buying debt. They're at about 1/10 of our biggest creditor, which is China and Japan, they're just a little bit above $1 trillion. They're now at 100 billion. So just one company has 1/10 of the debt that the U.S. has ever sold to China and Japan.
Because of the backlash against cryptocurrency in the U.S., Mark and Whitney's conclusion is that the Federal Reserve will try to sway public opinion by promising that the digital dollar will only be handled by private entities and not by the government. Their article came out in January, and Fed Chair Jerome Powell said something similar in March when asked if the central bank had any plans to issue a cryptocurrency. Powell said, "We're nowhere near recommending or let alone adopting a central bank digital currency in any form. If that were a government account, the government would see all of your transactions, and that's just something we would not stand for, do, or propose here in the United States. If we were ever to do something like this, we would do it through the banking system. How scared Mark and Whitney were the central bank, which is partly responsible to us citizens, won't be in charge. Instead, the feared banking cabal could be in charge of people's information and what they can and can't do with their money. This is on top of worries about digital IDs, a global carbon credit system, and other bad plans by the global elite."
We really do, yeah. I mean, they have to sell this debt to somebody, right? We're now at this kind of unique place where the debt service, just to service our debt, not to pay it off, but just the service of the interest on the debt, is now outpacing in a year the growth of the GDP. So we're essentially, if you look at the U.S. as a corporation, and in many ways it is, we're a zombie corporation. You would never invest in us, never. Our debt is outpacing our growth. And so they have to find somewhere to sell this debt to. It's been Japan and China and, the Bahamas basically, for the history of the U.S. selling debt. And now all of a sudden, out of nowhere, we're seeing these private entity stablecoin providers just Pac-manning up government debt and just eating it up. And that's not going to stop. We've heard from, Walter Hessert, who's the head of strategy at Paxos, which is very integrated with PayPal. They run their PayPal stablecoin. And he's specifically said that we're going to see, trillions of dollars of stablecoins, highly regulated stablecoins issued. The only way that happens is if trillions of dollars of government debt are purchased, or spreading U.S. government debt around the world. And they're using this really clever and diabolical framing of, hey, no, we're, these countries like Argentina, they've been wrecked by inflation and their really bad currency is the issue. It's their bad currency, their fiat, bad governance, monetary policy. So we're doing a huge favor by giving them access to U.S., dollar denominated, essentially bank accounts. We're banking the unbanked. But no, really what you're doing is you're charging the global south a fee to use your bank account. And in a lot of these cases, these are like offshore Bahamian bank accounts. Some of them are, they're now getting more regulated within the purview of the DOJ and the SEC and the CFTC and, the Fed Treasury. But, historically, these have been basically offshore banks. And we're going to see high velocity of dollar usage, high volume of dollar usage. And we're going to see more and more countries relying on the dollar. And we're seeing that, in South America, as you stated, and in the global south, and on the whole, and in parts of Asia, huge upticks of stablecoin usage, of dollar usage. And it's being framed as this like humanitarian effort, wherein really it's debt serfdom. In fact, there's actually probably more ability for a private entity stablecoin to do, there's probably more opportunity for a private entity stablecoin to do more shenanigans with the programmability of their dollar-denominated token rather than the government. Again, they can hide behind, the restriction of customer access being in the private sector. They retain a lot more ability to do that than they would if they were openly in the public sector. We've seen this happen before. We've seen multiple times in the last few years, banks restrict people for saying certain things online, or being, around the Capitol building on a certain day, or, protesting mandates, say in North America and in Canada, and taking away banker restrictions or rights to your bank account. So we've seen the private sector, the private banking sector, already flex these restrictions for being private entities. That it will only be more accessible for them with programmability. They could take your money away, blacklist your money. We've seen this already with the FBI and the Secret Service coming on to Tether. They've blacklisted dozens of addresses at the behest of the regulatory arm of the United States. That is a power that will not be given up. It's too important as a tool. And so as they, with one hand, are pushing this as this financial tool to give sovereignty to the global South, at the same time they're onboarding literally U.S. intelligence and law enforcement onto that very system that is a very transparent and surveillable, programmable system.
The U.S. government won't be near the CBDs to protect citizens, but this has always been the plan. We've been hearing more and more about this global private-public partnership for years, and their goal is to make a new world order where the lines between rich and powerful aren't so clear. Finally told us what their plan was. There was a warning from Whitney and Mark that Fluent Finance's US Plus stablecoin would one day become the official digital currency of the United States. It would not be controlled by Jerome Powell or any other US government agency, but by big commercial banks like JP Morgan. Whitney said that the US would get the same digital currency garbage that's being issued in other countries, but it wouldn't be controlled by the Fed, but by banking industry watchdogs like Jamie Dimon. Which would you rather have, a CBDC controlled by the Federal Reserve or one controlled by JP Morgan? If you agree or disagree with Larry Fink and other Silicon Valley executives, please leave a comment below. Also, if you liked the video, please subscribe to the channel and turn on post alerts to see more videos like this.